Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, June 7th at about 1 p.m. Eastern. Well, the U.S. economy created far more jobs than expected in May, and annual wage growth reaccelerated, underscoring the resilience of the labor market and reducing the likelihood that the Federal Reserve will be able to start rate cuts in September. The Labor Department's closely watched employment report this morning also showed the unemployment rate ticked up to 4% from 3.9% in April, reaching a symbolic threshold below which the jobless rate had previously held for 27 straight months. And on that note, let's go on to three charts that can give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $535.49, a new all-time high as long as it stays above the new all-time closing high right here, set on June 5th of this week, which was actually this past Wednesday, and that closing high was at $534.67. Now we'll do a quick review. You can't see it on this chart, but from October 2023 lows, the intraday low actually back then was at 409. Since then, the SPY, the SPDR, jumped up above its 200-day, its the black line, the red line, the 20-day, and the 50-day moving average. And actually just about, as you can see here, ran up the 20-day moving average, up all the way up from the October lows all the way up, and that's because interest rates were dropping, all the way up to the all-time closing high back then, the March 27th high at $523.17, this little candle right here. So those 5 months from October to March, we saw the SPY gain 22%, not too bad. But markets don't go up forever. Markets move in cycles. So from that March high, the SPY started to slow a bit, and we really can't blame it. It was fantastic. And then profit taking started in, as it always does, and we saw the 20-day fall below the 50-day, and price fell down below both moving averages down to an April 19th low of $493.86. Now from there, the SPY struggled a bit. It said, oh great, now I got to get back over this ceiling of the resistance sometime offered, sometimes by the 20-day and the 50-day moving average. It's called what was support is now resistance. So it struggled a little bit, but not too bad, made a couple of little higher lows here, grappled with those moving averages, and finally on May 6th, right here, it jumped up over them, and it finally hopped above them to about $516. So that's real strong. It rallied from there to make another May 21st high at 531.36 up in here. And then from there, it dropped lower again. In the last couple of weeks, we saw it drop lower. It went down to the 20-day, but didn't really go below it very much. Still above the 50-day moving average, and using that for support, that was bullish. So back to where I said we are today right now at $535.49. Now our intraday high today was $536.39. So at this point, we're still in a beautiful uptrend here, and we cannot complain. Personally, I've decided to take just a few profits here and there, and I'm firming up my stops here. I want to see what happens. We're going to call the new resistance here at 536, 537. So we've got that to watch out for. We have potential price support at the 20-day moving average at $528 and change. We have the 50-day moving average here coming in at 517.76, so you can call it 518, and a teeny bit of price support there as well. From there, if price goes below that, we head down to these down to May at 400, and down to the April low again. The April low was at 493, 494 right down here. So we have potential price support should the market start to feel a little woozy. Hopefully it keeps making new highs. We'll just have to see. We really need to pay attention. This upcoming Wednesday is important. On that day, we have the CPI, or the Consumer Price Index, and the core CPI coming out. That means food and energy. That's a very important report having to do with inflation and interest rates and so forth, what will happen. We also have the FOMC rate decision being announced that day as well. So this coming Wednesday will be a very important day. As we always do, our next chart that we look at is a daily chart of the Invesco QQQ, symbol QQQ. This ETF follows the NASDAQ 100, which has the top 100 non-financial stocks in the NASDAQ stock market. The NASDAQ 100 is home to the big momentum stocks like NVIDIA, Meta, Apple, Microsoft, AMD, that whole group. Now, as I captured this chart today, the Qs were trading at $464.07. And right at its June 5th, the new all-time closing high, and that was right there at $464.07. So it's all up here at all new highs, and hoping it holds till the end of the day and through the weekend. We all know that back in October, and again, you can't see it on this chart, the QQQ made a low at $342. The indexes were all falling back in October because of the higher interest rates. When the interest rates started down a little bit, the SPY, the QQQ, and many stocks all jumped up over their 200-day moving average, which of course is the black line on this screen, jumped up over the 50 and 20-day moving average. And then just like the SPY, pretty much a little more volatile, the Qs walked up its 20-day moving average, a couple of little dips here, but not too bad, walked up its 20-day moving average from end of October, beginning of November, all the way up to its new all-time high at that time on March 22nd. And that was back in here, wait a minute, at March 22nd at 446.38. So that was the all-time closing high at that time. Then in April, like the SPY, weakness set in. So in April, it started to fall. You can see how the Qs dropped below the 20-day moving average. They tried to sit on the 650-day for a while, but couldn't do it. So came down, crossed below the 50-day moving average for the first time in a long time, and sunk to $413 on April 19th. So that was the low that set in. From there, like the SPY, it struggled to move higher, but it did it. It made a couple of small little higher lows here, trying to get up back over that 20-day and 50-day moving average. And on May 6th, it finally hopped over the 50-day moving average and got up to 440. So that was a good move. Then moved up to a high of new all-time high of on May 28th to $459.68. Did the little dip down that the SPY did down to the 20-day, then rallied to its new intraday all-time high. As I said to you before, the closing high at 463.53, and we have to see where it closes today and so forth. So we're right at these new all-time highs. So we're going to call it now that we have resistance here, price resistance at 465, 466. That'll be our new line. Then, of course, we have potential price support at the 20-day moving average at 454. Then at the 50-day moving average at 441, 442, potential price support. And then, of course, we can go down if we need to, down to the May low at 420. and the April low at 413. And then, of course, we've got the 200-day moving average. So a lot of potential price support here if we need it. Of course, to remain in a strong bull market, we want the Qs to stay above the green line, the 50-day moving average. I'll call it 441, 442. We want it to stay above that. And with the CPI coming out next Wednesday and the Fed decisions coming out next Wednesday, it's definitely going to have an impact on tech stocks, which are the backbone of the QQQ. So please keep an eye on your protective stops. Our final chart today is the daily chart of the iShares U.S. Medical Devices ETF, the IHI. We've traded this before. The IHI has 51 holdings. Top holdings include Abbott, Intuitive Surgical, Stryker Corporation, Boston Scientific, and Medtronic. Now, when I captured this chart today, the IHI was trading at at $56.69. Now, if you look at a long-time chart, and whenever I get into a trade, I always look into a long-term chart. You will see, if you do that, you can't see it on this chart, of course, that the IHI traded up to an all-time high in October of 2021 to $67.29. From there, it fell, it seesawed up and down much of the time, finally fell to its own October low, 2021, at $43.96. From there, and now we can see the November low that was right after it. From there, it moved into an uptrend, and you can see the November low here, as I said, down here at around 45. But after that October low that everybody made, it jumped up from the October low and moved in an uptrend up the 20-day moving average, and you can see how it traded at a premium to that 20-day moving average. And many times uptrends that are going to be strong will do that. This is a beautiful uptrend. It kept on moving up, and you can see, like if I always use the analogy of a staircase. If we were walking up a staircase, the higher we get, the tireder our legs get, right? Well, the higher this moves over the 20-day moving average, the tireder the price gets. And we can see that it moved up finally to its March highs up here at 59. And then, like the SPY and the Qs and most stocks, it got tired. It dipped down in March here, tried to go back up, couldn't do it. In April, crossed down below the 20-day and the 50-day moving average, came all the way down here to its lows, down to about 54 right here. Now, I've been watching it. I've been sitting and watching the IHI ever since it came down to that point. A lot of times I'll watch a stock for a couple of months, and I like to do that and then wait till I see a good opening. You probably do it too. So it dipped down to the April low here at about 54. Then it started consolidating through April and into May, and then I watched it jump up over the 50-day moving average in May, right to about $56. Then started, consolidated, then dipped back down to about 55 here, and then started moving up again. And today, as I said when we captured this chart, is trading above the 20-day, above the 50-day at $56.69. And it looks like the 20-day is trying to make a really positive crossover here if price can stay above its 50-day moving average. And again, the 50-day moving average here is coming in at $56.01. We'll leave off the 1 cent. So the 50 days coming in here at $56. I think that I like the setup here. I like that the stock is orderly. I do believe that IHI is going to benefit from AI, which of course is important. Again, I like the setup. I like the orderly price pattern. Also, right now, medical stock, as usual, medical stocks are considered to be defensive, and that may be a good place to be in the coming week. So in the coming week, as long as the IHI behaves and remains above the 50-day moving average, so I'm not going to give it a lot of room here. As long as it stays above the 50-day moving average, again coming in now at $56. If it does, I will add a small position of the IHI to my trading portfolio. I'm going to put my stop down here pretty tight at $54.90. Now, if and when the IHI can move above this prior high up here at 58, if it can do that, I will add to my position, and of course my stop will be a trailing stop. So you may want to keep an eye on the IHI in the coming week. And now, some good news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. From our ever-popular 7 Steps to Successful Trading, to how to swing trade successfully, how to trade the trend to profits, one of my favorites, how to read charts, 3 winning setups, bottom fish like a pro, another one of my favorites. Find out how these online programs can help you earn higher profits quickly and easily. And please know that once you purchase the program, you have unlimited access and can go at your own pace. So be sure to check them out by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.